This is David Patrick, Fitzstock Charts, market video update for June 19, 2019. We're in 11-day uptrend. Today is Fed Day. I'm at 85% long market exposure. I've been leveraged long many times this year. This is our fourth uptrend of the year. We had 11 uptrends last year. We are high stacked with profits. There's no reason to be super aggressive with any kind of new trades before the event risk today. Our statistics year to date, our numbers, 231 different stocks have engaged off our focus list. 5 of them currently are in limbo, no scales, 20 losers, 206 winners, 89% win rate, unheard of in the industry. And we're going to continue to look at our 2012 historical chart pattern comparison. A couple things here. Let me change that, minimize it. Before we get to the 90% club, a couple things I'm going to address. I had a question about taking a stock after it triggers. In fact, I had 2 questions about that today, and so I figured I'd bring it up. If a stock triggers off of our focus list, first of all, you know you can't trade the first 5 minutes. From 9:30 to 9:35, you don't trade. Use the 5-minute rule. Your trigger price might change. If you're not familiar with the rule is on the subscribers page on the website. So anyway, take any stock that meets your risk profile at 9:36 using the 5-minute rule. In my opinion, it has a higher probability of working out if it pays you right away, meaning that first day or second day. Specifically, the first day you trade it. If a stock triggers, it doesn't pay, and we're unable to scale. And by the way, let's look at a couple of these. If you look at the ESFL, obviously the new setups are at the top, and the ones that have already engaged are here. So we have Cyber, Disney, Amazon, Ulta, CMG. So these 5 we have been unable to scale. We like to scale ideally at plus 1% and plus 2%, and then raise our stops. Those options could be up plus 7, plus 10% on the first scale, plus 15 to 20% on the second scale. Then you raise your stop to your entry. If you're a hybrid trader like myself, if you're a swing trader, some people just keep the stop at the ESFL, whatever it is that meets your risk profile. But the reason why I'm bringing it up is these stocks that haven't paid yet, there's been numerous questions on, can we take them? Well, yes, you can take them as long as they're still above the 10 SMA. But in my opinion, according to how I've traded for 20 years and how I've used this system for a while, these are now lower probability new entry trades because they've lost the momentum to pay right away. So can they still work out? Absolutely. Let's just say we bat 80%. Maybe these that don't pay right away, maybe they bat 70%. And I don't even know those statistics. I'm just giving you an idea. I think they're lower probability than a new, fresh stock taking it as it engages. So I wanted to address that. There's our 90% club. 122 different options that are up over 90% year to date. 1,065 doublers since we launched, 296 triplers, 31 triplers year to date. These numbers are unheard of. A couple things, we have all the answers. We have all the answers. If you can ignore the noise, the media, the news, and not try to have an opinion on it, or even try, I keep my TV off all day. And I tell you what, back in the days, I kept CNBC on 24/7. You know what? It might have educated me more on current events that are going on, which is fine. But the problem is with media in general, if you're a trader, it affects you emotionally because it gives you an opinion on what's going on with the world, what's going on with the economy, what's going on with corporate fundamentals. You're going to have an opinion on it because you're going to see people in the media that have opinion on it. And then you're going to try to be smarter than them or agree with them, and then you have a bias. You have to program your brain like a robot that doesn't have a bias. The only bias it has is to buy and stay long in uptrends. Everything else is noise. Keep things simple. Trade the uptrends. We've had 4 this year. They've all paid. All those 4 of those have paid. And just keep things simple. Ride the trend until it stops paying. Okay, higher time frame, lower time frame. We need to look at that also. I'm going to circle that before I forget because I want to start doing that on all the videos. We are 5 minutes in, and we're going to look at the historical chart pattern comparison. I have over on the left here, 2012. Okay, these are not even close to identical, because if you look at moving averages, you'd be confused on how I'm even having this historical chart pattern comparison. It's more or less like, look at the lows here, MACD lows. You came down and retraced, right? MACD hit a higher low. You got lows here. We retraced. MACD higher low. Bull flag back above a 50 and a 10. 10 is catching up the price right here. And that's above a downtrend line. Above a downtrend line, above 50, 10, 10 MS SMA is catching up the price. So, you know, right in here is where we could be on this historical chart pattern comparison, where maybe we drift and retest this 2900 and see if this 10 SMA truly is support, and maybe even violate it at some point late week or early next week. Obviously, if we break it significantly or if we close below it, we have a different, right away we're going to diverge. But if we don't, and we continue to close above the 10 SMA like we did back in 2012, then we're looking for a run into earnings season, into July. So like we always do with all of our historical chart pattern comparisons, we never predict. We ride trends. We have a thesis. We look at higher time frames, and we know that all historical chart pattern comparisons are good roadmaps, but they always will diverge, and we always have to be prepared for that. So with that said, what will be our, lines in the sand? Let's look at a few indicators here. Okay, let me get rid of these fibs, clear everything out. All right, here we are. And if you look at this whole picture, by the way, I went cash here and here, was leveraged long many times in between. This whole picture to me is a bullish cup and handle pattern until it isn't. What would make it not? You come down here and you break these, then it's definitely not, right? Until then, you have a double top, and if we get up here, triple tops, according to my 20 plus years trading, barely ever hold, which means normally you rip through it. Every once in a while, let's call it 5% of the time, when they do hold, it's a pretty dangerous move back down. I think it's a lower odds trade if that happens. I think the higher probability is if we grind up to new highs, we're going to continue to grind in this earnings season and grind to 3,000 and above on the S&P. I'm not going to predict where we're going. Everyone always wants a target or bogey. I don't know. I just know we're in an uptrend. I'm bullish in uptrends. This is a bigger picture, bullish pattern, cup and handle. Let's look at the higher time frame. No reason to look at 5-minute rules of engagement today. Today is the Fed day, and there's really no reason to be trading today. So here's the weekly. You can see a weekly cup and handle. MACD bull cross. If we close here, we go back into an uptrend on the weekly. What happened in 2012 on the higher time frame? Yeah, I just screwed that up here. Let's see here. 2012, right here. MACD bull cross went into an uptrend going into January of 2013. And then look what happened. Just a nice grind higher. Everybody's in disbelief. Everyone's talking about the Fed. What's the Fed going to do today? They're going to raise. They're going to lower. What's the interpretation of the market? If they lower, is that bad? Does that mean a weak economy and the Fed's trying to, come in here and stimulate things? And if so, maybe the market's not prepared for a slower economy or recession. You can interpret whatever you want. But I'm telling you, that's the wrong way to do it. Keep the TV off at 2 p.m. Watch price, watch the reaction to price, see where we close. You're going to learn more there than you're going to learn with the TV on trying to interpret Feds and why they did it and where they think the market's going. The market's going to tell you where it's going. Why do we have to be smarter than the market all the time? Why as humans do we try to be smarter and just simply ride trends? Okay, enough preaching. Let's get into, we're almost 10 minutes deep here. let's get into everything here. All right, so there's the S&P. We looked at that. We looked at the higher time frame. Let's look at the NASDAQ. NASDAQ's similar. It's lagging a little bit. I do like the fact that it came above this 50 SMA. What would not shock me on the NASDAQ is if we did some drifting just to come fill this gap, let 10 SMA catch up the price before maybe grinding up or even grinding up like that into earnings. Not predicting, just saying that's the thesis until we see a broken uptrend. And we're not going to predict an open uptrend either. XLE. Oil continued to just drift nowhere. I want to keep looking for a trade in that sector. I just personally don't see one. And if I'm willing to miss that, by the way. So I was talking to some guy and another intelligent investor / trader the other day, and we were talking. I was telling him, and very seldomly do I say my opinion. But with that said, my opinion is always based on price. So I said, if the market doesn't fail on Fed Day, and it doesn't fail the day after or the day after, because really it's Fed plus 2 in my opinion. The Fed Day and the next 2 days after are the most important. So if we don't fail, let's call it by Friday's close, okay? And we close somewhere around here, above 2,900, let's call it. I still think that's bullish. And then if we start to see it grind back up next week, I still think obviously that would be bullish. So we're looking for what could lead, what could lag. Well, I think oil is still lagging. Can it short squeeze? Yes. But all we really need is either the NASDAQ. We need two things. We either need the transports in the NASDAQ or the banks in the NASDAQ. That's my personal opinion. Or some kind of industrials in the NASDAQ. And you don't necessarily have to have two. It's just what I prefer. I would like to see the NASDAQ in some other sector, whether it's, even if it's small caps, whatever it ends up being, I'd like to see another group of stocks. I would like to see two sectors, so to speak, lead. So the financials, to me, have not been good this year to us. They've been good to us since 2013, since we launched. I don't think they've been great this year to us. You know, you look at some of our stop outs, and I believe a few of them there were in that sector. I think BlackRock, JP Morgan was one, Bank of America was one, an exchange stock CME was one. So, and Goldman Sachs. So that's 4 or 5 of the 20 stocks that were stopped out were in relatively that sector, whether it's, you know, exchange trading companies like CME, ICE, CBOE, or credit card companies, Visa, MasterCard, or even the banking sector directly. Whatever, let's just call it that sector. With that said, it hasn't been a great year for this sector. The NASDAQ has. So this can very much wake up quick. And this is a megaphone pattern. We'll call it an internal one because it wasn't up high. And this could grind to new highs at some point this summer, as crazy as it sounds. So once again, where do I think bonds are going? You already know. I've been bullish bonds a while. Interest rates, I think, will continue to go lower. And I'm not going to make my interpretation on banks with whether they're going to be bullish or bearish based on interest rates. I'm going to only read the tape that the banks tell me with the charts. I'm not smart enough to have the interpretation of anything else. I'm telling you. And either are you. Okay, so with that said, XLF, I think it looks promising. But once again, you're in Fed Day. You don't know how the market's going to react. Ideal, Russell small caps just doing absolutely nothing. Transports is in that bigger wedge. I still think we need, once again, small caps, banks, or transports. Something has to erupt. IBB is waking up a little bit, which is nice. Some stocks in that sector are looking much better. There's our bonds. They just hit new highs right here. That was without MACD. That's bearish divergence. It would not surprise me to come down here and retouch 128 before much higher prices. And I do think bonds go higher after they consolidate. Gold looks fine. Hit new highs with MACD. Could rest a little bit. And I think gold looks higher also. Apple. A very bullish price action. You had a bull flag here, a bull flag here, and another bull flag. This is the third bull flag. We're coming into a lot of gaps. Ideally, I'd like to see this one rest before hitting new highs, but I ultimately think this one's going to, yes, new highs, 220, 230, 240. I personally think that one's going higher. It doesn't matter what I think. It only matters what price suggests. Right now, price is bullish until it's not. Amazon, same thing. I think this one could go to 2,000, 2,100, 2,200. Why not? To me, the pattern is still bullish and until it isn't. Netflix. Come on, David. really going nowhere. We're in a huge megaphone, elongated megaphone pattern. Don't see too much there. Booking, don't see too much. Expedia, it's in that wedge pattern. I don't even, this is more of a wedge pattern than a megaphone pattern. The wedge pattern is the pattern I hate more than anything. Once you come to the tip of this wedge, you either break out or break down, and it's just volatility. It likes to whipsaw, and I don't like that pattern. Facebook continues to be bullish. This is one that was on the ESFL to add, and the 5-minute rule saved it because it did not engage. Let's look at that real fast, because some newbies with the service so they understand what's going on here. Time frame, let's put it on 3 days back. So right here, the opening 5-minute candle you don't take. If the opening 5-minute candle is above the trigger price on our focus list, the trigger price changes. It changes to this next candle, or then any candle after would have to be above this candle's high, 194.53, which is the new trigger long. And obviously we didn't hit that, and stock is now sold off 10 straight dollars. So that's the 5-minute rule. More on the website under subscribers with that. So let me go back to the daily here, and let's look at the rest of the stocks. Facebook, what's Google doing? Nothing. It's underperforming. Tesla, grinding nowhere. Nvidia, AMD, Micron. Some of these semis like OLED look pretty good. Xilinx, I think, could short squeeze. Texas Instruments, not too much. Avgo, it's under the 50 SMA, so I think OLED looks the best. Otherwise, I probably would avoid that sector. Microsoft I like a lot. I am long Microsoft. And this is a bullish price pattern. I think this is a leader right now, and I'm going to continue to ride it. Oracle's slowing down. Let's look at some more software. Adobe looks very good and setting up to add. Coop looks pretty good now. CRM's lagging. Workday, Jobs looks okay. FFIV, Team slowing down some. Roku, 106. I mean, so we have a MACD bear cross on Roku. I would ideally like to see this thing rest somewhere around 95 to 100 for the next leg higher. I do think that goes to 125, 130. But I also think it would not be bad if that stock rested for a little bit. Twitter slowing down. Box, Shop I do own. That continues to grind higher. So there's a double top on MACD. It's a tough one here. I think it could pull back to 291. It's possible I get stopped on my run on Shop. That one's paid. I've already scaled. I scaled all of my trading accounts. Scaled, what, 85% of the other account. It's one that paid fat. Let's see what else we got here. Okay, let's go into some China. Baidu, they're all short squeezing off lows. I just don't really see a new setup there just yet. Let's look at Palo Alto, Cyber, looks pretty good. BMW, eBay. eBay looks like Microsoft. It looks like it wants higher prices. GoDaddy, Wix, not too much. Visa, MasterCard, just really grinding nowhere. Bank of America, Goldman Sachs, Morgan Stanley, JP Morgan. Citigroup actually looks interesting. It's not a bad risk-reward long. You can't take it obviously going to the Fed, but we're going to see the market's reaction shortly here after and see what happens. PayPal, I believe new highs yesterday, reversed. It hit new highs without MACD. It's bearish divergence. It could come back in. It's a tough new trade. COP. We're in the oil sector. We're looking for anything here. PSX, CVX, Marathon. To me, they look oversold. They look ripe for a short squeeze. You're just buying a sector that has relative weakness, and I just normally don't like doing that. Win looks decent for a short squeeze. So does Las Vegas Sands. Not a bad risk reward there. DBX, nothing going on. Let's go to the biotechs. Amgen, bull flag. I like that one to squeeze to 189 or 190. Not bad. It's a nice setup. Guild back above the 200 SMA. Jazz, some of these are starting to turn the corner and might start building some momentum. ISRG, not bad. Aluminum looks pretty decent. REGN lagging. X-Ray continues to grind higher. MACD's pretty flat. Align, not doing too much. CMG, UBNT, some stragglers here. Twillo, IQ. Let's look at Lyft and Uber. So, you know, I'm long Lyft. I still think this thing lifts higher. 70, 74, this gap to 80. Why not? Why not? I mean, even if you're not long Lyft, I think versus, I don't know, this low right here, 58.75, you know, you're risking what, 8, 9% to make, I don't know, I think much more. I think, once again, the reward is two times the risk right now, in my personal opinion. So it's just another swing long opportunity on that stock. Uber, I like the MACD. this is really weird price action. You got MACD at highs and price just being flat. So you want to see some kind of breakout candle. We're just not seeing that. FVRR. This is actually a service I used, Fiverr, to redo my website. So this is a recent IPO. It's been on here. So we're going to continue to watch this one. This is a very interesting company. Small businesses can basically outsource a lot of their things, whether it's web building or whatever it is. There's so many different things you can do on Fiverr to expand your business and basically pay half of what you would pay in the US to outsource it to, you know, people working in Pakistan, India, or whatever. I'm just saying this is a very interesting company. I'm not sure what their numbers are like, but for an IPO, we'll continue to watch it, see how it goes over the next few weeks at least. We'll see if it moves. So let's finish with SPX. In my professional opinion, just trade the uptrends. Trade the uptrends, ignore noise, don't interpret news, tune everything else out. This is a bullish cup and handle until it isn't. When is it not a bullish cup and handle? We already talked about it. Below here, pretty much all historical chart pattern comparisons that are bullish would diverge if we go below here. And this would suggest huge volatilities, and bare minimum, we're going back here. All right? If we come up here and we break new highs, to me, that's huge, high probability that we are going to grind higher like we did back in 2012. We're just a grind, right? So if you're in from the last uptrend, you've taken, and you got in right here, right? Quite simply, your worst case scenario stop would be here, right? You probably raised your stop to your entry, which is, let's just call it here. So you're playing with the house's money because you used rules of engagement, you got in early, you maybe added on some price strength confirmation, you scaled yesterday, and you're sitting. And if you get stopped on your runner at cost basis, or even slightly below or slightly higher than where, you're fine, right? And if you go to new highs, you load it up early. Just use the rules of engagement. Don't overthink every move. The mark, we have, once again, we have the answer sheet. You have it right in front of you. You know what it says? R-O-B-O-T. Be a robot. Trade the system that works. It's a proven methodology. Look at the 90% club. Look at our ESFL. Look at our numbers, batting 89% of the year. Have conviction in what you do. That's all I have for you. Have a great day.